are alive, ladies and gentlemen. We have another great episode for you today. I'm excited to go over Bitcoin's price, Ethereum's price. Yeah, I know. Who'd be excited about that? But the downside right now has been a great learning experience, and there's something I want to share with you about Renaissance, the Medallion Fund, and one of our favorites so far of this year, Jim Simmons, the story behind one of the greatest hedge fund traders, and well, I guess more so the people who didn't trade but let computers do it for them. We're going to dive in. So let's take a look at the charts, and then we'll kind of riff and rant on the sentiments as we go forward. So boom. Okay, so on the screen you can see Ethereum, and we're looking at Ethereum right now on the 15-minute. And what's important about this is the red horizontal trading range, which I have drawn up on the top here. For those of you in the private members group, you would recognize this. I shared it in our Wyckoff setups. Now, sometimes it's hard to get this information out quickly enough to some degree because I have other things going on in life that I'm working on as well. So here we made a video talking about we would either go down, come above the creek and move above, or we would break down. So you would remember that. I believe I still have that original drawing. Yeah, here's the creek. See, we stayed below it. This is what we drew up on the video the other day. And as soon as we closed below this trading range, this was like a game over. So one of the exciting things here for me was the idea about going short. And not to actually go short. Now I want to explain myself here, because if you're using margin or something like this, you're actually selling short the asset. But what's unique about this sector over the last, well, few years is that these futures, these options contracts, they've really changed the dynamic of how bigger, more sophisticated players play in this ecosystem. So I want to take a look at this article. I shared this on Twitter today, and it's something that I didn't recognize, but I think something that's extremely important to understand. So for those of you, again, that are in the private group, you would know that I was really into Jim Simmons the last little while. He has a bunch of talks and lectures. Those were shared in the private members group, but you can find them for free on YouTube under Money, Mathematics, and Making a Difference in the World. Jim Simmons at MIT, which is really nice, but he started a firm called Renaissance Technology that manages around $166 billion in regulatory assets and is soon venturing into the Bitcoin futures area. Now, what's important about this is to understand how Jim Simmons runs his fund. Now, actually, he may not be the manager of it anymore, but the fund still runs under the same premise as when he built it, which is that it's operated by bots, so that you do not have a choice in what the model will do. It's going to make a decision for you. And they are high frequency traders. So they are buying and selling enormous amounts at any given time, and they have a big bucket to play. That makes a big difference in what they do. They actually go short. This idea of hodl for a company like Renaissance does not exist. They try to produce alpha in US dollars every year. That's it. They're not trying to hold Bitcoin. They're not trying to hold Bitcoin. They're not looking at it as a reserve asset, yet they manage $166 billion currently as a fund. They're the most successful fund, I think, in history, and he is absolutely dwarfed in comparison to people like George Soros, Warren Buffett, etc. Now, some of the world's most richest people are people who've created things like Elon Musk, so that's one of the ways to make the most money, is like some entrepreneurial, brilliant mindset that provides a product that's new and innovative. Jim Simmons is a mathematician who worked at MIT and hired other scientists who were like, hey, look, you can maybe predict the aphelion of a comet as it passes by, right? Try to help us predict the markets on a maybe 10 to 15 minute basis using multi-layered ideas of algorithms like, is it sunny today? Is there an election? What time of year is it? Are the markets going up? Under what volume? Under what demand? Under what supply? And on what day is it? Very complex trading, yet year over year they've done around 50% well, they don't even take private money. So the only way you can actually become a part of the fund is if you're a private investor, which means you work at you work there. Good job, Renaissance. Okay, so Renaissance is here. I missed that, and that makes a big difference. And they're trading on the CME. So even though these are not Bitcoin closed, now why is this relevant to Ethereum, you might ask, right? This is how this money is playing in this ecosystem. It is not a person. Comp man is not a person. And we've always tried to iterate this type of idea that comp man is like a character who's practiced taking money away from you, right? What Renaissance Fund is a high frequency trading firm, have practiced taking money in large amounts and successfully out trading the markets. specifically. That's what they've done. They've done that since 1988. That is a fantastic record. It's unbelievably sound. It makes me want to it makes me think, okay, well, this is probably what you would want to try to build and replicate if you were done. Other than venture capital, anyways, I don't want to rant too much, but here's the point of this story. These guys go short. They don't hodl. Why not? Because it's unimportant to them to hold more of the asset. They make an enormous amount of alpha in US dollars by trading in high frequency. So Ethereum printed this short. Now I want to look at this page over here. So here we have our private schematics distribution. We'll be redoing these because I realized the color didn't come out as fun as I wanted. I was trying to make it playful. Anyways, here's schematics of distribution in the Wyckoff accumulation or distribution areas. So we saw something very similar, and this is what we printed out in the private group, as you can see when we were back at $568. Now I closed my position out at 604 and around 590. I love these point of controls. They're really helpful, especially finding areas of resistance on shorter time frames. And as you can see, once we broke down here, or we got to effectively what would be the final parts of phase E around, between 568 and 540, we saw a big decrease in price very quickly. So here's that here's that side sentiment drop right here, right underneath the horizontal trading range. And then boom, under that trading range, when we couldn't close above, boom, big selling, right? These are not hodlers, and the more people understand that, the easier it is to know who you're playing against. If you think you can buy and sell better than that computer can, you're probably kidding yourself. You need to practice very specifically to recognize these moments of euphoria. So if you were to go to my Twitter page, we shared it as well, so follow us on Twitter, because I like sharing stuff there. I share things about waterfalls and Blockfi, the partner for today's episode, which we'll get to, but the schematic of distribution, and it continues, and earlier on there's actually this one here. Now again, the important part of understanding what this is understanding that the computers don't care about the innovation cycle. They don't care about the greatness of the tech. They care about the liquidity of the markets and can they play. And Renaissance is proving itself that it can do that in the CME futures. And even though this is not affecting Ethereum directly, it does affect Ethereum's price. So follow us on Twitter. We'll go back. And I wanted to point out again, remember that you are playing against a lot of highly advanced computers that have been doing this maybe even as long as you've been alive. 1988, I don't know how old some of the Bear family are, but if you were born at 1988, this fund has effectively been outpacing almost everything. Doing that, again, you remember, entrepreneurs can make more money by themselves individually, but this fund, Renaissance, is something special, and it deserves the attention of understanding what this means. And what I'm excited I did something kind of obscure yesterday, and I want to talk about this before we go into Bitcoin's price, and I think it's important. It's to recognize that this moment right here, in the private group, I opened a short here at around 560, but I opened that short at 100x leverage. So I only put $100 in this trade, right? All I wanted to do was risk $100 to cover basically 20 Ethereum worth of downside, ish. No, hold on, let me maybe it was less than that, maybe it was only 10 Ethereum of downside. I'd have to double check, yeah. Okay, we'll go like this. It's $180 was approximately 110 1.10 Ethereum, something like this. Anyways, 11 Ethereum. And it doesn't really matter. The point of this is because you've got a fluctuating price. So I guess we could just call it in US dollars. That's one of the okay. So here's the unique thing, right? Normally when you'd go short, the downside is you're selling an asset and you're actually taking ownership of the sale price of that asset. If you're going in at 100x, this is much more like, oh, I'm going to buy insurance for a play right now, which means that I'm currently, let's say I'm sitting on 20 Ethereum that I want to cover to the downside at this moment. So I can spend $100 to cover those 20 Ethereum to the downside, or that $200 to cover that 20 Ethereum to the downside. So what you'd actually expect that even if it breaks out here, you'd want to keep a check. So you don't have much time to make these trades. But again, remember, Renaissance, who's built a reputation around making these types of trades, can affect the market and control the human nature, and the supply basically just totally dried up, and it was quite noticeable. So I guess the importance of this is understanding what certain tools in the toolkit can be used for if you're actively managing, or if you just want to learn, right? So if you use 100x, you're gonna lose your money, most likely, unless you baby the trade and you're really specific about finding these types of tops. So when we saw that distribution came in, I felt glaringly obvious. We shared it with everyone. I decided, hey, you know what? I'm gonna risk like $100 to $200 on covering the downside for this potential here. And I did, it dropped like this. I got really excited and I closed out here. I shouldn't have closed out. I should have just let it sit, because we're probably gonna see more downside, maybe even as low as 410, 380. We'll keep an eye on that. So we'll look at this at the bigger story. So we had gone over this in our previous videos, that these SOSs, and so now we've got a new SOS that formed, and a secondary LPS, which is taking place right now. So a big part of the question will be, how low do we go? It's always a key part, right? There's an SOS and here's an LPS. So we were making some conjecture. Again, for those of you that have been studying with us, you will hopefully have read Reminiscence of a Successful Stock Operator by, I forget who by, but it was around the story of Jesse Livermore. And we were going over this, okay, 1, 2, 3, 4, 5, 6 pattern. And the top out here before the final 7 comes back down with a volume, another volume profile. I think it's actually on 2 diminished volume supplies that we have the next upswing, which is one of the interesting parts, just checking the supply. So I do believe it goes like this. We'd have to double check. So what we want to do is go, remember Jesse Livermore, another one of the great traders, although from the 1930s, not as advanced as what's going on today, but it's called his speculative chart. And it fills along nicely with what we've been studying with our Wyckoff accumulation ranges. So there it is. So we've been going over this a few times in our videos. So again, you've got this cylindrical widening mouth to a breakout of phase 8, 9, and 10 before a much bigger distribution. And I agree. And again, this is what understanding these tools can be used for, especially in the future, when you can use a very limited amount of capital to cover your entire position if you don't want to sell, but you want to be able to take advantage of covering the downside. These more advanced exotics provide that, and that's why big funds like Renaissance use these things to their advantage. So you'd have a negative, no, okay, plus. You actually have a plus on the volume side here in what he's calling 8. So when we were back here, oh, where are we going? When we were back here on our chart for this return to our position number 8, this is where you're going to actually see another increase. So I drew this one wrong. It should be an increase in volume on this final go up too. Before you get to the top, and then probably see one big blowout and then a big downside. So we could target anywhere between $1,500 to maybe $10,000 for Ethereum. I really don't care. Some of you guys have asked me about downside potential before in last, and it's kind of unimportant to me right now. Like, where do we take profits? We're too early on in this to take profits. If you're just buying and selling, you should just pretty much just be buying right now, unless you're playing with exotics and you know what you're doing, and you can use it to your advantage, or you just want to learn the process and make some mistakes. It's a very important thing to learn, I think, but kind of up to you. So again, we might see a quick automatic rally here, come back down, but either way, Ethereum and Bitcoin are providing something very interesting. So we're going to move on to Bitcoin next, but before we do that, we're going to give a shout out to today's partner and sponsor, Blockfi, one of the future of finance ideals. I agree here. What Blockfi provides, the ability to earn up to 8.6% APY on your Blockfi interest account, is extremely important. If that money is just sitting, you can let it go to work for you. Extremely important. You can also now borrow against that collateral, which is extremely exciting. This is a new part of DeFi, I think, that a lot of people don't recognize, is the lending and the collateral aspects that can take place here. I do suspect that we are going to see lots of innovation around the sector, so keep an eye, and at the very least, do your homework here, guys. Give these products a try and see how they work, because this is the future of finance. All of this stuff is. It's fantastic. You can also trade as well. I haven't taken a look at their trading account, but mostly because I'm specific and I like exotics. So I live in Costa Rica, I guess, to some degree, maybe even as well. Anyways, the point of this is go support Blockfi, sign up. They've got a $250 sign up bonus, depending on how much you deposit. So if you sign up, you're also getting rewarded with more Bitcoin. It's a helpful fun fact. And again, for everyone out there, this is the great time to be exploring what's taking place, because this is a brand new emerging sector in every way, shape, and form. And Blockfi has taken the lead in some of these aspects as well. They've got they're backed by big ventures like Susquehanna, Coinbase Ventures, by the Winklevoss twins. So I think at the very least, understand that experimentation, and the more you kind of spread your wings and fly out and try all these things. You understand that there's risk involved, right? So you don't ever put too much in any one area. It's always a great security feature. If anyone's worried about security, try it out though, because this is where we're going, and the more you know about it, the better your future is probably going to be. So check out Blockfi, Future of Finance. I like this slogan. That's a good one too. I'm thankful for them for partnering with us. And because of that, we did another Kifa campaign. Thanks to Blue, shout out for helping us fund these. And some we've got some more money to lend again here soon. So we're excited for that. Thank you to Blockfi. Thank you to the Arcane Bear private family members. And we will dive in and jump and take a look here at Bitcoin now. So again, the aspect of what we were going over in Ethereum lies true to our assertion for, okay, look, April. Where's April? Oh, look when Renaissance showed up. Look at that. Who would have thought? Right at the spring. That's some of the world's best. So remember, some of the world's best showed up here, right at the spring. They are, if they just went long, they're clocking multiple times over their initial entry points. And remember, these are high frequency trading companies that have hundreds of billions of dollars in liquid capability. So they might be looking to just let go. So now, it'll fall under retail's hands. And now we get to see the backup phase. So the backup phase, you should be patient for. Right, so if you didn't do a leveraged exotic, you didn't take out, like, let's say $100 worth of Bitcoin at 100x, so you're buying like, what is $1,000 worth of Bitcoin that's covered for the downside or something like this, right? Then don't worry yet. This is not a time to go short. There's a lot of room for upside still, but more importantly, we want to find the downs. So the downside, we'd been looking at around 12,000 to 14,000, and hopefully I'll get the podcast out later today that we did with Philip Swift of the Decent Trader. Decent Raider, either one of those, I guess. But the point of this here is we're looking for the first kind of selling climax of this new trading range. And when we're looking for a new trading range, the reason we want to be so patient is because you don't really want to worry about catching the exact bottom. If you want to build into your position, which is what I'm going to be doing here, building into my final long positions, you want to, I want to have a lot of room of clarity. So let's say it comes down to 13,000 instead of going to 16,000, because there's big funds here. They don't care if Bitcoin comes lower. They're not hodling. They're selling short because they know how to make money on the downside, right? So don't think that everyone here is a hodler. Not everyone is like a retail investor. If you have funds that move hundreds of billions of dollars around, they show up and they create the market almost. So remember that. It's important to remember. I think it's so important to remember comp man in this game, right? Look, if Michael Saylor was able to not move the markets with his hundreds of millions, think about why that is as well. It's because there's always buyers and sellers for those large amounts. Ethereum may not have that in place. Like, that's why we saw a recent market crash on whatever exchange that was, because not everyone is using these like liquid futures markets, right? But Ethereum is also heavily like emotionally based off Bitcoin's price, because Bitcoin provides the collateral for the rest of the Ethereum financial system to function with to some degree. They actually work in tandem very, very well as far as I can tell. So when we're looking at Bitcoin here, again, one of the main things we want to assert is that we're looking for a new trading range. We've got time to do so. And if you didn't open a short, then there's no reason to think about going short here. There is reason to be patient and to look for where this trading range evolves, because these are going to to be the final LPS and SOSs of this explosion. So I'm really looking forward to that. The next few months, probably in the springtime, like I said, is going to be the fun part, because now we'll get some sideways action. We may even see an explosion in other parts of the ecosystem, in assets that whose supply is diminished but not yet hit demand proportions. Link could be one of them. Here you can see Link is actually about to take out my take profit stop loss, because I entered it around 10.7 to 11.3, so it's pretty close to that. I thought we were gonna get more of a breakout, but this is okay too. If again, remember, we're going actually through a horizontal trading range, so SOS, LPS, SOS, LPS. There's no reason to think that this is unhealthy yet. But keep a close eye on it. Again, Bitcoin is kind of the money of this ecosystem, so everything moves in tandem with its emotional sentiment. We'll keep it at that for the day. Thank you guys for joining us. Give us a thumbs up if you like this episode. Join us by, again, I guess I should have mentioned this before, but the links for Blockfi are in the description. You can go to arcanebear.com/Blockfi or Blockfi/arcanebear.com. We're going to continue giving the Kiva campaign. So in the private group, we'll do another one here, and then we'll see you guys again on the next episode.